So I'm just going to give people a few minutes to hop in before I get started. Hope everybody's having a good night tonight. Sorry, everybody, give me a minute. I'm a little bit behind right now because I'm getting started a tiny bit late. What's up, George? Just about another minute here, we'll start. Hey, Duck, welcome. All right, so I'm going to go ahead and start now. Tonight, my focus is going to be going over POCs, volume profile, VPOCs, of course, value area, and that's probably it. I mean, we'll probably end up talking about some other stuff. Right on, Yankee. Um, and we'll just get into it. It's been, God, probably like a good month since I've done a video, just due to life being life. But I'm gonna be cranking out more videos now. So hopefully this helps some people out. And yeah. Really quick before I start, you can see I'm looking at HD on the daily chart. For the people in Shorty's Discord, we have this is the 1 month chart. So 12-year, 1 month. We have a bullish full send. So I'm going to be playing this. And then if we look at TradingView here, we're in a demand area. So I'll be looking to take this over like 305-ish, give or take. But I think this is going to be like a monster play. I'm looking to take 350 calls for June 17th. And for the people in the Discord, it's posted in the members play chat. But so let's start with the, sorry, just changing my chat room. Let's start with the POCs and everything now. I'll just chart on HD here. So just going to show this for people that don't know. If you're looking for POCs, sorry, my headphones just turned off. Alrighty. So if you're looking for POCs on your charts, you're going to want to, if you can get them in ThinkOrSwim, it'll be in the description from the video on YouTube, or in TradingView. You have to have the paid subscription to TradingView, like the $15 plan works. Search for VPSV and use volume profile session volume, not the HD one, the regular one here. Okay. And then from there, you know, your indicators show up here. This little eyeball shows whether they're being shown or not. So you can turn them on and off here. Also edit the settings here. For POCs and VPOCs, we want to be looking at the 30-day, 30-minute chart. And you know, so the POCs are the point of control. So let me just get like zoomed in on one POC here so you guys can see it really well. So for example, this red line here, if I hide my candlesticks, this red line is the point of control. And what that signifies is the area on the chart where the most trading took place during the day. You can always check with extended trading hours on and off. Generally, they don't move, but in this instance, you can see extended trading hours on. My POC did move. So you want the POC that has just the regular trading hours and not the extended. But like I said, most of the time they don't move on or off. But in this instance, they did. If they move far enough apart, like let's say HD had a POC here with extended trading hours off and a POC down here with extended trading hours turned on, I would actually plot both of them. But for me, this one's close enough that I'm not going to plot both of them. So once I put it on my chart here, what I do is I label them so that when I'm trading, I know exactly what I'm looking at. So this is going to be April 6th VPOC, which is Virgin Point of Control. I'll go through really quickly. I'm going to draw the important ones, the key ones. I'm not going to label all of them, but we will go over the difference between a virgin point of control and a point of control. Almost done with the drawing, guys. I know this part is monotonous and boring, but I have to cover it so you guys know how. So really quickly, the difference between a POC versus a virgin POC is a virgin POC is one that has not been touched. What's that? Sorry, I just got something really weird. No idea what's going on. Okay. So for instance, right here, this is a virgin POC. During the day when the POC is formed, so like all of March 29th, of course the POC is going to be touched many times on the day that it's formed. In after hours or extended hours, it can still be touched. But once the market opens and we leave the POC, it would become a regular POC once we go back up and touch it. So for example, if I was to chart this one here, which I don't know why I didn't plot this, this was a virgin POC until this candle here that came down and broke through it. And then the second candle touched it again. So on the day it's formed, it will always be a virgin POC. So like this one here, as you can see, April 6th, virgin POC. But the ones that are touched on the next day, like this one is no longer a virgin POC. This one here is no longer a virgin POC. And this one here is no longer a virgin POC. Same with this one here. It gets touched right here. So these are just regular POCs. So with these, I just chart,
Hey,
like
Drew, you're not sharing your
March
screen. I'm
28th
not sure if you know that.
POC. Again, I'm not going to label all of them. Hopefully you guys get the idea. If it's touched the day after it's formed or any subsequent days after that, it will be a POC. If it hasn't been touched, it's going to remain a virgin POC.
Drew, you're not sharing your screen.
Why this is important, the psychology of the points of control. You want to look at it as if, oh, I'm sorry, I'm not sharing my screen. My bad.
Yeah, I'm not sure if you heard
Bear
me or
with me
not.
for a second, guys. It's been a while since I've done this. Hilarious. There you go. For everybody in the Discord, you can now see my screen. I apologize. It's been way too long since I've done a live, and I'm feeling a little bit nervous, I guess. Um, not in my element anymore, that's for sure. You guys should have yelled at me. Anybody could have spoke up. You guys have
Yeah.
microphones. You guys can. Oh, my headphones are off.
Can you hear
So
me,
if
Drew?
people, yeah, I can hear you now,
There you
Josh.
go. I've been trying to tell you. I'm like, you're not sharing your screen.
Oh, that's hilarious. I have my headphones, I have wireless headphones, so if there's no sound, they turn off. And
Gotcha.
I haven't done a live in so long. I forgot to share my screen. I was running late. I'm never late, so I was like trying to rush everything. Missed a missed a
Oh,
uh,
good.
missed a slightly vital step there. Um,
Yeah, now we can see you. We're good
yeah,
now.
Namely, you're talking about the POC shifting. I'll cover that. Don't worry about it. I'll cover everything. A lot of people are typing, and I will, if there are questions, I'll get to them in a little bit. Let me just get through this part. And, honestly, if you have a question, I'm probably going to cover it. So I'll get to you. I'll get to you, Nam, okay? But so with POCs and virgin POCs, you want to think of the psychology of traders. And so up here, if you put yourself in the shoes of a buyer up here, what happens is, and let me get zoomed in a little bit more so people can see. Okay, if you bought here, think yourself as a retail investor. What happens? And we're not talking about options because theta decay will change this, but we're talking about people buying actual stocks. So if you're buying, HD at 334 up here, and then the very next day it goes down, and then down more, a little bit of upside, down more, down more. The next time you come up to 334, what are you going to do? Hopefully everybody's thinking you're selling, because that's the reality of
Sort it.
order. Pretty much every retail investor. There are some, maybe Josh, who have learned from Shorty to not think like a retail investor, and that's great.
Oh, yeah.
But you should be ordering down here, not up here. But most retail investors, if they bought here, the next time the price comes back up to 334, they're gonna dump those shares so fast just to get break even and get out of the trade and be like, phew, I can move on, live to trade another day. And so that's why these are so important, because when price comes back up here, we're going to have so many retail sellers getting out of this trade. It's going to dump it back down. It might just come back down to like 329, which is our next POC, but we could come all the way down to 317 here, at this POC down here. There's really not very much supporting it between there and there. We do have like a POC here, which I guess I probably should plot at like 324. But other than that, there's not too much. You can actually grab this entire area, and I'll cover this more later. But there's 4 POCs there. So there's a good chance you'll see some kind of choppiness through this area. We gapped once here and gapped back down, or not gap, but flew through it here and flew through it there. But But the next time it comes to here, you might see some choppiness. You just never know. I think my headphones just turned off again. Hang on one second. No, they're on. Just random noise. Maybe if people can just talk every once in a while, just so I know that my headphones are still on and that the battery is not dead or something. So that's the retail investor buying up here, selling break even. Where we have like market makers, they're going to be buying here. They might take profits here. You know, of course, market makers know where the POCs are. They might buy here, take profits, buy more here, take profits, buy more down here, take profits. And so market makers, how you want to think of their orders is, let's say they wanted $100 million of HD. And so they place their $100 million dark pool order for HD right here as a limit order at 304. And they get, let's say that they get a partial fill of 50 million and then the price starts ripping up, right? They are not going to move their order up to here to buy more. They're going to leave that order down here because they know eventually it's going to come back down to this price and they're going to get filled at this price. So they'll take their 50 million, they'll take profits up here. They might even, you know, put this order back to another $100 million order. Anyway, they're going to take their profits somewhere, you know, or if they're expecting a bigger run, they might hold through this little dip and take their profits up here. And eventually when price comes back to here, they're going to get that $50 million, you know, that remaining 50 million filled, which is going to cause more upside. You know, it acts in two different ways. Dark pool orders, they don't affect the price of stocks, but you know, when people that use things like tradie ticks or unusual whales see those big orders getting filled or those big orders coming in, then retail starts buying and it helps drive the price up as well. In this case, you know, it actually gapped down, and they might even buy more here. Who knows? But they're not going to sell here. They're going to wait, you know, till we get back up to here because they know that we eventually will. And they're going to sell there. So hopefully right now POCs and VPOCs are making a lot of sense to everybody. Market makers are going to buy low, sell high. Retail has a tendency to buy high and either sell low or sell break even. You don't want to be those people. So you want to learn, you know, like when we were looking at HD on the 1-day chart, you know, this is exactly what I was talking about. I erased that zone, but, you know, we can draw it back in really quick. It's 305-ish. That's good enough. Down to 295. And for me, this is going to be green because it's going to be a demand. And you can see when price came to here, boom, flew. And then we went all the way up to what, like 420, I believe, ish, give or take. Yeah, 420. And then we come back down, touch it again. We rip up, you know, to 340. Boom, touch it again. If we break over 305, you know, we should see 340, possibly more. But we'll have to see how it plays out. I'm optimistic. But so this is the buyer you want to be. You want to be the responsive buyer that's waiting, you know, for the price to come down to a good demand zone to take your calls or buy your stocks. So hopefully that's making a lot of sense to everybody. So Nam brought up in the YouTube chat, when I change time frames, these POCs move, and that is very true. But it doesn't matter. You're always going to want to chart your POCs on the 30-day, 30-minute time frame. When you change time frames, They do move, but when you're changing time frames, you're not going to be looking. I mean, at least me as a trader, I don't have my volume profile on when I'm trading, so I turn it off. I normally trade on the 3 minute, so I'd be looking at something like this. These would all be labeled though, so I know what dates they occurred and if they're virgin point of controls or if they're regular point of controls. I'll turn my volume profile back on so you can see they do shift significantly. But again, it doesn't matter because these levels are going to be respected. If I go to my SPY chart, you know, like the last couple of days on SPY, if you have these levels, like you really can't miss. You know, so here's a March 22nd POC, January 31st POC, down here, March 21st POC, and then in the middle we have the March 23rd POC. And you know, at open, if you grab puts when we rejected this January 31st POC, you got paid. If you took calls when we bounced from the March 21st POC, you got paid. If you took puts when we rejected the March 22nd POC, boom, you get paid. And every time you're approaching a POC like this one, it flew right through it, no problem. And then here we flew right through it again, no problem. But when you're approaching it, you're always going to be expecting a bounce or a rejection. So you're going to be getting ready to sell. You know, like if you did take puts here, you're going to get ready to sell here. And, you know, I mean, this almost hit this level to a T. So even though I'm on a 3 minute time frame and this level has shifted from where it was originally plotted, it's still respected on this time frame. So the time frame is not important. The level is important. All right. So we'll go back over to HD now. I'm just going to scan through the chat. I'll be quiet for a second here. I just want to read and see if there's any questions. Timothy, if you have questions, if it's not related to what we're talking about right now, you can DM me and I'll get back. I'll get to you after I'm done with this class. Oh, awesome, Ashley. Yeah, VPA is a great book. The finest arts, I find the 30-day, 30-minute levels are like deadly accurate. If the 20-day, 30-minute is working for you, you know, use it. But a lot of times the 30-day, 30-minute is like to the penny. Oh, why is the January 31st still on my chart? Where was it? Oh, this one here? Well, I mean, there's actually a few reasons why I have January 31st on my chart. One of the reasons is this area, this huge red area. There's like 8 POCs in that area. So I just left it on there because I expect choppiness through this area. And actually, you can see here it's kind of respected. Kind of respected here as well on this red candle. But mainly the reason it's on my chart is because it falls in this area that has like 8 POCs on the day. So that's why I've kept it. So, and G. Smith brings up another a great point I would have got to eventually. Most of the times, virgin point of controls you can leave on your chart indefinitely. They will more likely than not get touched at some time in the future. Whereas POCs are generally good for about 30 days back. And after that, if they're not being respected, I'll take them off my chart. So otherwise, you'll just have too many lines all over the place of things not being respected. Ashley, I don't know what you mean by show you how I get my screen to look like this. This is TradingView. I mean, I have blue and white candles. You just double click on them and you change the color. So white candles are green and blue candles are red. But for visual sake, I just prefer the way this looks. And I guess I'll cover this really quick. I use this plain volume indicator down at the bottom. And I use the 20 moving average on my volume. You can see this blue line. So anything above the 20 MA, I consider a good amount of volume, basically. I mean, other than that, Ashley, you would just have to watch a video on TradingView. There's a lot on YouTube. You can just Google. I mean, you can just search in YouTube, and you'll find a lot of videos on setting up TradingView. So what I was saying is POCs after 30 days, you'll want to take them off your charts. And I think that's really it for the POCs and virgin point of controls. If I didn't cover anything thoroughly on that aspect, you know, let me know if you're not understanding something and I'll go over it again. From here, what I do, and after I chart this, we can actually play around and I can show you like charting without having candlesticks on your chart. And for people wondering, up here at the top, this little eyeball, you can turn your candlesticks on and off right there. So what I do with my POCs is I zoom in on them. I got to go to the 30-minute. My bad. And so what we're looking at here, this whole blue and yellow area is called the value area. I'm sorry, the volume profile. In this instance here, it's shaped like a P, which generally means you're going to have a bullish day. This one here is shaped like a B, a lowercase b, which means you're going to have a bearish day, generally. The red line I'm covering, I did cover that at the beginning of the video. This is the point of control. So if you missed that, just rewatch the beginning of the video. After I'm done with my live stream, you'll be able to go back and rewatch it. And it'll explain what all of this is. Okay. So on our volume profile, this is showing all of the buying and selling that takes place on any given day. And again, the same thing, I use a 30-minute time frame. And so what I like to do is you look at your volume profile and you're going to look for the area where you have the most buying and selling. And these are called volume shelves. And so what I do, I'm combining these two POCs together. So I'm taking the largest volume from this one here and the largest volume from this one here, and I'm drawing a box or a rectangle, whatever you want to call it. And this area here, I won't trade inside of. If I break below it, I'll take puts. If I break above it, I'll take calls. And I'll explain that in just a second. So I'm sorry, again, I haven't done a class for, like I said, like a month. And so I'm skipping things, but I'm going to go backwards really quick right now. Sam, there is no POC indicator for Webull. And what I always tell people that use Webull is you can use TradingView. If you use mobile also, only use mobile, then TradingView works really well on mobile. You can plot your POCs um, in TradingView, and then you can just import the levels into Webull. So, my gosh, what did I forget to say about the volume profile? Oh, volume shelves. So, um, let me see if I can find like a interesting. Okay, we'll use this day as an example. Okay. I'm just going to quickly draw, and then I'm going to turn my candlesticks back on. That way, these volume shelves hopefully will make more sense to people. But so the way I like to look at volume shelves is whenever a stock is trading within a certain area, like over a length of time, it's going to form a shelf on the volume profile, like we see here and here. Where there's no shelf, this is called a skinny belly, and the stock can easily pass from this shelf to this shelf, or from this shelf back up to this shelf. So the way that I really like to look at volume shelves is like rungs on a ladder or steps on a stairs. You can go from one step to the next or from one rung to the next, and you can go, from a step up to down. But if there's no step, you can't stay there. So like if I tried to go from this step up to here, there's nowhere for me to go. So I can jump from here up, but I'm going to fall back down to this step because there's nothing here to support me. If I step down from here, there's a step to support me. On the following day, if I step down, there's a step here to support me. And then I can also jump back up to this step and jump back up again on following days, and these steps are still going to be there. So just from looking at my volume profile, I know we opened probably somewhere up here, came down, traded sideways, fell through this area very quickly, traded sideways through here, and then probably just ended the day. There's a chance that we went from here back up to here, but I'm guessing we went from here down and stayed here for the rest of the day. At some point we came down and traded in here as well, but not very much volume took place down here. So now I'll turn on my candlesticks and you'll see, opened up here somewhere, traded sideways in here a little bit, fell down quickly to here, traded sideways, came down here a tiny bit, but most of the time is going to be spent in this area and this area here. Oh, look at that. And if I do replay and go back in time and go to like the 3-minute, this becomes even more prevalent. So like I said, we opened up here somewhere. It did chop through here a little bit. This volume shelf is more prevalent on the 3-minute than it was on the 30-minute. But we came here, bounced, came back, bounced, came back and broke through and cruised straight through this area, like I said, pretty quickly. Back up, bounce, yeah. And again, I said down in this area for a little bit, which we did, and then we just chopped sideways for the rest of the day. So pretty much exactly what I said. Oh shoot, hang on. I feel like my battery's low on my headphones. Josh, can you say something really quick?
Hey, Rock, I have a quick question.
Oh, go ahead, D-Rock. Yeah, great. I can hear you.
All right, cool. Just when you were drawing your rectangles, were you using a key that made it extend all the way to the right,
Oh,
like automatically?
I'm not, but what it is so if you click on the rectangles, why is that not working?
Sorry, I was on push to talk.
You're good, bro. Um, and so if you double click on your rectangle and go to style, right here, there's a extend right or extend left. I just use extend right because I don't need it to extend to the left. So
Oh yeah, that's perfect.
That
Yeah,
should
cool.
hook you up. And then once you set it for 1, it becomes the default. So, but so anyway, hopefully right now everybody's like really seeing the value of the value area. I mean, of the volume profile, and how these volume shelves can really help you with where a stock is going to go. If this was a more of a skinny belly, we wouldn't have seen this choppiness here. It would have just flown right through and then possibly flown right back up. But this created a little bit of support and resistance here. But you can see it's not much. I mean, it got through it pretty easily, and then, and if you're smart, you're thinking right now, well, this is going to be forming as the day happens. And yes, that's absolutely true. It's not going to be there for us before the day happens. But as the day's forming, you'll start to see these shelves forming. And then that's why you're going to have your POCs and your virgin POCs, and also have other rectangles drawn on your screen. So you have a good idea of where price is going to go without the volume shelf being completely formed. But as the day goes on, you'll have a good idea of where your volume shelves are for that particular day. So let's go back, turn off the on-demand feature here, and go back to our 30-minute chart. So I'm going to turn off the candlesticks again really quick. I don't want to draw too much, but I mean, hopefully you guys can understand by, looking at the volume shelf. And this is not like a perfect science. Charting is an art form. And so you have to decide what you think the majority of the volume is. Like if I was just doing this POC here, like I would grab up to here. That's where the majority of the volume is on this volume shelf. But since I'm going to incorporate both of these here, I would go to this line here on my volume profile to incorporate the most volume for both of these days here. And then I come down to this one. We're going to draw it in down here as well, I believe. Yeah, that's probably most of the volume right there. And the ones that I think are going to act as demand zones, I just color them green. It doesn't really matter. This is just personal preference. It doesn't matter what color they are because they can act as support or resistance, so it doesn't really matter, So I have this one drawn here, but I would take it up a little bit higher to incorporate this virgin point of control here. We've got these two covered here, and then I would want to grab these ones really quick. So here. It's right about there.
Rockets, earlier you said you had that one POC where it kind of flew through on the upside and downside, and then on the third time it kind of reacted. Like for you, like what is like your ground rule in terms of it not being respected? Like how
let me see if I can find a really good example for you, because when a stock is trending, it's really hard to see like like let's say tomorrow SPY opens and it just rips faces and moves like 5 points in 8 minutes. Like no POCs or VPOCs are going to be respected in that time. And it's just because we're having a trending day. So if it's a trending day where like a stock is just taking off, I'm not going to base taking off a POC based on a trending day. If I'm having a typical day where, it's up and down and it's not moving really fast and it just goes right through a POC, I'll take it off my chart. or if it's over 30 days, I'll take it off my chart if it's not being respected again. But I have some POCs that are older than 30 days that get respected all the time. I believe like February 28th is a big one that gets respected a lot on SPY. But let's just go look at SPY really quick, and we'll go to the 3-minute and turn our candlesticks on. When's the last time we had like a real trending day? So I have to have taken it off. I know there has to be a POC in this area right here. But if I show you, like if I go over to TOS, I guarantee you I can find a POC that's right around this area. So even though we rip through it, you do see it kind of rejects, bounce, and then comes back down. So even though we're completely trending, it is being respected here. And now I just have to find a POC where we're ripping through it, and you can see that it's still being respected. It's harder, it's easier said than done. Let's see. Actually, I think right there is like a fairly good example. So we can all agree this is, I mean, it opened up like sideways, but then it turned into a trending day, right? We just kind of ripped faces from, I don't know, 439 to 444. Oh, wait, this is this day's POC. Never mind, I'm sorry. Let me find a good one. Oh, here you go. This right here is perfect. So, again, trending day, right? We're ripping right here, or typical day. I don't know. Yeah, I guess it's a typical day. But at the end of the day, it was definitely trending. So even here, as we're ripping down, you can see, I mean, there is a big wick, but this March 1st POC is still being respected here. This wick is showing that we start having buying pressure here on this POC, but it wasn't enough and we fell through it, right? And then when we come back to it, we actually reject off of it, cross through, but then there's selling pressure before we finally break through it. So even though these are major like trending, down and up, you can still see it's still being respected, pretty well, even though we're ripping faces, like ripping down and then ripping up, right?
Yeah, I see what you mean.
So even if you notice like some wicks, even if it's not very much, like if you have a red candle here and you see like a wick below, and then we go like, we pull back a little bit and then go through, that's that POC being respected.
Yeah, I see what you mean. It's essentially if behavior is being impacted or altered, it's kind of like, okay, it's being respected.
Exactly.
It doesn't necessarily have to be big, but like, yeah, this is a good example. Thanks.
Yeah. G Smith, volume shelves I draw on the 30-minute. If I was drawing them on the 3-minute, it's just because I'm a scatterbrained tonight. I don't know why. But so yeah, if you notice a little bit of a change in the pattern when you're going through POCs, they're being respected to some degree. And you have to figure out like if it's enough of a degree to keep it on your chart. When you see big moves like this, I wouldn't be like, oh, time to take it off, because it is still being respected even with this massive rip face move. And then you see it here, you know, as we're coming back up, being respected again, you know, on quite a few candles. So here, 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 and here, it's all being respected. So there's 4 touches right there where, you know, it's being respected. And it's enough that we formed, so here from that March 1st, we formed like a little bull flag. And then here from February 22nd, not really a flag, but just, yeah, resistance there. Okay.
Yes, sir. Thank you.
No problem. Let me go back over to HD. And let me go back to the 30-minute. And sorry, I know there's another question in YouTube. I'll get to it right now. Based on the chart, that why choose June 17th? June 17th. Oh, you're talking about for the Home Depot play. Because, well, it's going to be a little bit hard for me to explain, but here, I think I showed this at the beginning. This here is a 10-year 1-month chart. So each candle represents 1 month of time, right? And so this play from taking, you know, calls from here up is going to take at least a month, if not several, to play out. And that's why I'm taking June 17th. You could actually go even further out. Like, let's say this number 2 was a full send. You know, this is 1 month, 2, 3, 4, 5, 6, 7, 8, 9. 9 months for this to go from this low to this high. So that's why I'm taking it a few months out. But I'm not greedy. I'm not looking for this full move. I just want a piece of the pie. Enough of the pie. And I don't want to spend thousands of dollars on leaps on HD. So that's why I'm taking June. But just because I'm taking June doesn't mean everybody else has to. You can take whatever play you want. You could do $310 calls for January of 2024 if you want to. It's completely up to you. Okay, so back to the... I was doing these on the 3-minute, huh? Actually, I'm not really sure. So anyway, for me, for HD, these are going to be my main levels. I would probably also grab these POCs here, because I have a POC here, 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 and here. So this whole area, I would expect choppiness. Trying to figure out exactly how far down I want to come with this. So honestly, it's really hard to say. I mean, you can go to 316. You could even bring this down to incorporate, you know, some more of these candles here. But I don't like to draw like huge boxes where I just don't take trades. Yeah, trying to think what's best here. Probably right around there, give or take-ish. And as you can see, like, this is consolidation, this is consolidation, consolidation. Yeah. So inside of these boxes, I just avoid taking trades. And I look for, you know, rejection or bounces from the boxes to get in and out of plays. And so, I mean, like, frankly, I'm kind of done with the HD chart. There isn't really very much more for me to show you guys on here. But if we go over to SPY, just because that's what I'm more comfortable trading, you know, so like I was showing earlier, I know I already showed this, but once you have these levels, how I like to trade is when I see this rejection here, I'll try to take puts right as I'm crossing below this box. I would be expecting to take a trim here. And we can actually see, just like we were talking about earlier, you know, even though this is kind of trending, we do see a bounce right off this March 23rd POC and a pullback before we rip back down more. We also see a bounce pretty close to this March 18th POC. And once we break out of this box here, you know, we go all the way down almost to the March 21st POC. But again, I'm not expecting like to the penny to touch the POC. That's why I have these boxes. This is going to be my volume shelf for that March 21st POC. So I am expecting a bounce when we come to the box. If not, I'm looking for a bounce when we hit the POC. If not, I'm looking for a bounce when we hit the bottom of the volume shelf. If it breaks through all three, you know, I'll continue the puts down. When we see this bounce here, I'm hopping in calls, you know, if I'm fast enough, right when we break this this box. And same thing, I'm going to look for a rejection here. So these ones I probably, if I played, I would have sold right here because I do get a pretty good wick, an indecisive candle, you know, and then wicks on both ends, a red candle. But this one happens to have a lot of buying pressure, but I'm green, I'm taking my money and I'm running. So as soon as I see this start to reject, I'm getting out of this trade. If you stayed in it, you know, obviously you can play it to the far side, but that's not how I trade. I'll take my profits here. I'm not going to take calls from here to here. When we leave this box, I would take calls, and I would probably end up selling them, you know, somewhere right around here. Because I'm not going to let a green trade go red. And then I would have established, oh, this is going to be, you know, some kind of a, it's going to be a bull flag, bear flag, whatever. What wicks you choose, that's up to you. I don't really like taking this here. I'd be more along the lines of here or possibly this, but it'd probably be this one right here. You know, obviously you move your flag, you know, as it's forming. And then from here, for anybody that doesn't know, when you have a bull flag or a bear flag, the last touch of the trend line is going to be your safe entry. So I wouldn't take calls until I cross over this touch right here on this blue candle of the trend line. I would take calls above that. And for this might be getting a little bit complicated for some people. And I'm not saying that in an insulting manner. But if you look at my YouTube, I have only one playlist, and I call it like my beginner to advanced series. If you go through all those videos, I cover bull flags and bear flags way more in depth and how to trade them. But I do want to cover it really quickly. With bull flags, you're going to use your Fibonacci retracement tool. You're going to grab the top of the flagpole, drag it down to the bottom of the flagpole, and I'll pull this up really quickly on the screen. If you guys want to screenshot this, or you can always rewatch the YouTube video and find this area. But these are the fib levels that I use, and I'll go over them in a second here. I'm giving everybody a second to screenshot in case they want to. All right, closing it now. So I know this is getting kind of cluttered, but let's try to move a few things. to make this clearer, but for me, bull flags and bear flags are like one of the easiest trades you can take, especially if you draw your fibs. And right now people might be wondering, like, that's not a bull flag because it only has one line. I don't bother drawing like the whole thing because I'm not taking a break of the bottom of the flag. The only line I need to know about is the top of the flag because I'm going to take a break above. If this broke down below, I'm not taking puts. So this is my pole here. This is the top of my flag. This is the bottom of my flag. If any of these candlesticks actually came down and touched this 0.5 fib, I know it's kind of hard to see because of the color within the green. Let's actually change the color so it's easier to see. Purple. That's hard to read inside of green as well. I have no idea. White. There we go. 0.5 fib. So if any of these candles came down and touched this, this is no longer a bull flag. Or if it was the inverse, it's no longer going to be a bear flag. But once we break the top of our trend line here and the last touch of the trend line, we take our entry. Your first trim on flags is going to be the 272 level, 1.272. This will get hit like 80% of the time on the break of a flag. So this is a good, like, 80% accurate trade. So this is going to be our first trim. If you take multiple contracts, you buy them here, sell one here. Your next trim is going to be the 618 level. If you don't get there, the 272 becomes your stop loss. So in this instance, we never get to the 618. We come back down. As soon as you touch the 272, you would sell your remaining contracts. We can look at more bull flags, bear flags, whatever, and you'll see a lot of times they do come to the 618 level, or your third trim is going to be the 786 level. A smart thing to do is if you buy like 10 contracts on the break here, as soon as you get to the 272, sell 8 of them. Leave like 2 runners, one to sell at 618 and the last one to sell at 786. Hopefully that is making sense to everybody. I'm gonna so far this has been a pretty short video, so I'm gonna break down bull flags and bear flags a little bit more. This is really just how I trade. TA and volume profile, value area, POCs and virgin POCs. The one thing I haven't discussed is if you look at this area, sorry, where is this one here? So my volume profile has an area that's shaded darker and an area that's highlighted. And I don't normally draw lines on these, but I'm just doing it for visibility's sake. This area is called the value area. And on your settings on your volume, actually, I'm glad I thought of this. I didn't cover this. On your settings on VPSV, you want to change your row size to 200 and your value area to 68. And so what that is it's saying the value area is 68% of the entire volume profile. And so with the value area, there's a rule that's called the 80% rule. And that is if you break above, like we did here, the value area, and we come back down into it, 80% chance that you'll go from this side to this side. So this is a very easy trade, especially for newer traders to take. It's very, 80% is great odds. But you'll go from one side to the other side. And the inverse is true for taking calls. If you break below the value area and come back to it, 80% chance you'll go from this side to this side. So nice, quick, easy trade. So then, actually, let me go to like a chart that I just never use for anything. Tilray. So I just want to really quickly outline bull flags and bear flags. This might be like way too basic for some people. I apologize. And actually, I'm glad I'm doing this because I normally cover this at the beginning of my class and I forgot. So right now I'm just drawing like imaginary candlesticks. Sorry, kind of boring. Okay, so when we're looking at charts, we have one of three things happening. We're either going to be an uptrend, consolidation, or a downtrend. Okay, so this side here is going to be our uptrend. So this is our higher high. And then this one down here is going to be our higher low. So if this was our previous higher high, this one's higher than this one, so this is a higher high. Our previous higher low is going to be, down here somewhere, so this higher low is higher than this higher low. And then this here becomes our next higher high. This here is a higher low, right? So this low is higher than this one, correct, everybody? Here, we do not have a higher high. I don't even know why I put that there because I can't chart anything. It's actually equal. This one here, just because of how I drew it, is slightly higher, but it's still not worth noticing. And we also don't have a higher low. So then here, we have a lower high. And over here we have a higher low, right? And then this becomes our next lower high. Hopefully everybody can agree the market moves like this. Of course, not exactly like this, but some variation of this, right? This area up here, the way that you trade consolidation, once you realize like you're not making new higher highs, you're not making new higher lows, this is consolidation, you're going to draw a rectangle around it. And this rectangle, actually give me 1 second, I'm sorry. Okay. So once you recognize that you have consolidation here, you're going to draw a rectangle around it. And again, the color indifferent, but I'm very OCD. So, and plus this will be easier for you guys to see. So once you recognize that you have, sorry, 1 second. Okay, once you recognize you have consolidation here, put your rectangle around it. And the breakout from consolidation is actually going to be like a measured movement. And what you do is you measure from the bottom of the rectangle to the top of the rectangle. And you can see this is a 0.91% move. And so if we break above, we're going to draw from the top of the rectangle up 91%, which is always really difficult to do. That's good enough for me. And if we break down below, we're going to move 0.91% to the downside. Yeah, I can't change it to 91%. Anyway, you get the idea. So rectangle consolidation is a measured move. You draw your measurements to either side. That way when the break happens, you know, if we break to the upside, you take calls. Break to the downside, you take puts. So where our flags occur is, this is our pole, and this here is the top of our flag. The bottom of your flag, again, I don't draw them in, but it would look something like this. And there's your actual flag, okay? For your bull flags, the bottom of your flag would be here, and the top of your flag is here. And we're going to play the break of, let's just say a candle came, the last time it touched was from here to here and touched the trend line there. We're going to draw a little line. Whoops, not that one. Right here, and that's where we would enter the trade. Let me delete this one just because it's intersecting with our bear flag. For our bear flag, same thing. If our last touch was a candle from here to here, you're going to draw your line. This becomes your entry. And then your fibs, again, you take from top to bottom, or inverse, your bottom to the top. And for our bull flags, you go from the top of the flagpole down to the bottom. Okay. And again, first trim 272, second trim 618, third trim 786, 780 or 272, 618, 786. Let me look through chat really quick and see if I have any questions. No. All right. So that's going to be that. Let me just erase all this really fast. I had a few people in Discord ask me to cover specific things. I'm going to go over those really quickly. So one of them was, people wanted me to show my add, VIX, NQ, and ES. So I'm always, I mean, every trader should always be watching these. If you're in Shorty's Discord, you already know about all of these, but so ES is the E-mini S&P 500. So basically, it kind of mirrors what SPY is doing in SPX. NQ is the E-mini for the NASDAQ. And so this will mirror what QQQs is doing. So for these, both of these, you know, if I'm looking to take calls on something that trades on the S&P 500. I look at EQ to see if it's confirming the direction of the trade that I'm looking to take. Like if I'm hopping in calls, I want ES to be in a green uptrend or curling into green. Same with if I'm taking something that trades on the NASDAQ, I look at NQ and I want it to be, confirming the direction of the trade that I'm taking. VIX, most people should know this, but it's basically it does the inverse of the market. So when the market's going green, VIX goes red. When the market's going red, VIX goes green. And so I also look at VIX, if I'm trading S&P 500, I'll look at ES and VIX. If I'm trading NASDAQ, I look at NQ and VIX and make sure that these are inverse and that NQ is going in the direction of the trade that I'm trying to take. Add. Oh, I always forget exactly what it's called, but it's advancing and declining stocks. So you can see here, this is negative 1,449. And what it's telling us is how many stocks are negative on the day versus green. So like for add, anything below 0 is going to be like a red day on the market. So most stocks are going to be red. Anything between 0 and 750 or 749 is going to be like a neutral day, kind of trending sideways. And anything over 750 is going to be a green day, trending upwards. So add is just an indicator of, the direction of the market. If we were to line up the charts, this will line up with ES and NQ and SPY and all of that. So this should be moving the same direction as the trades you're looking to take. I also, you can also look at it for divergence. So like if you're in a trade, like let's say I take calls and the ad starts trending red, there's a good chance that my trade is going to turn around and go the opposite direction. So I might want to start looking at exiting the trade. And I think that's really going to do it for the class today. We knocked it out pretty quick. Oh, sorry. Actually, there was one other thing. Somebody asked me to cover full send. I'm not going to do like anything in depth on it, but I will go over it very quickly. So full send. Full send is an indicator based on Elliott waves. So you see like the counting, like 1, 2, 3, full send, and then 5 up here. Elliott waves end on the 5th count. And it's basically, it's more than just counting ups and downs. Like you see this downward doesn't have a count. This doesn't have a count. I don't know exactly how the math works, and I'm not really interested in how the math works. The indicator just works, and that's what's important. After 5, it resets to 1. 1, 2, 3, full send. Here's our 5. 1, 2, 3, full send. So on this, it looks like a lot of the times the full sends pop up on the 4th. That's not always the case. Sometimes they'll pop up on 3. Sometimes they'll pop up on 5. The number 5 full send is generally the most violent, like the quickest moving. And 4 would be the second most violent. 3, as you go lower, the less violent that will be. G Smith, there's not an in-depth video on full send, or at least not one that's public. It's a private indicator that you would have to buy from my mentor. And if you were to buy it, like he would teach you how to use it in depth, but there's no public videos on it because it's not publicly available. And so there's no reason to have a public video on it. But you can see like this is it should be the 1 year, 1 day chart. Yeah. Full send's only shown up on SPY 3 times in, a full year. And so this one here went from 436.50 to a high of 454.09. So it's like a 20-point move. This one here went from 448, basically 449 to 479, or basically 480. So another huge move here. This one just popped up today. And that's why Shorty alerted those 450 calls on SPY at the end of the day. So this, we should see, a pretty good move to the upside from this full send here. But yeah, I mean, that's really it on the full send indicator. They're based on Elliott waves. When they pop up, they're pretty damn accurate. I think Shorty said they're roughly 90% accurate. So that's going to be it for the class. I'll pause for a second. If anybody has any questions in the Discord or in... Oh, George. Yeah.
Thanks, Drew.
9 EMA and VWAP. Sorry, really quickly. I mean, you guys can cut out anytime you want, but...
yeah, I got it. Appreciate it, though.
All right, brother. I'll catch you later. I had told people I would talk about the 9 EMA VWAP and how to use that in trades, and we'll just look at SPY.
Did you also add the clouds to the tail end of that?
We can go over
Or is
clouds. No, I mean, we can.
It's gonna be too much.
No. We can go over it. It's going to be brief. Like, I'm not going to do a huge in-depth class, but I'll go over it enough that anybody that's here will be able to use the clouds like with confidence and apply them to your trading day. But I'm not going to do like a really long. It's a good like hour and a half class to go in depth on that. But so for me, actually.
Yeah.
Oh, sorry. Go ahead.
Yeah, the only other thing I was going to say was that, what you said is perfect. And the other concept, the one thing, open and closed, I hear that mentioned a lot, and I'm still not sure I fully understand what's meant by open closed cloud.
Yeah, no worries, D-Rock. I'll go over it really quick. I mean, like I said, it'll be enough that you'll feel comfortable using it, moving forward from today. We do have a video somewhere on the Discord on the clouds, but I'll go over it really quick, before you get into an in-depth video on it. But so the 9 EMA VWAP cross, this is something Shorty taught me. He does talk about it occasionally. Basically, if you're looking at puts using the 9 EMA and the VWAP, you want the 9 EMA to be below the VWAP, and you want a candle to close below both. So like in this instance here, you would take puts after this candle closed right here. So that means you would hop in puts on this very next candle over here and play it to the downside. And you can see, it works really well. And then here where you come up above, and I mean, personally, me as a trader, if this green box wasn't here, when I tap the VWAP and reject, I'm going to take puts. If I break above the VWAP, I'll take calls. But pretend this VWAP's not here. When you close here below, on this next candle, you can take puts again. And these moves might not seem very big, but this is money over and over. Same thing here on this one closed here. You can take puts on this next candle. Like when it retests the 9 EMA there, play them down. I mean, it came all the way down to the outside of this box here. And then for calls, you want the 9 EMA to cross above the VWAP. And it's going to be the same thing. you're going to wait for a candle to close above, which is this green candle here. And then on the next candle, you would hop in calls. You know, we chopped a little bit here. And again, I wouldn't take calls inside of this green box, but I'm just showing this for like demonstration purposes. I would take calls when we break above this green box. And then, and actually this is a good thing to mention really quick. I'm happy to take a call here, take profits, you know, somewhere up here, re-enter calls when I break above here again, you know, and I'm going to be looking to take profits when I get to this January 31st POC, assuming I get there. So I'm always happy, you know, like you'll hear traders all the time saying the retest is going to be the biggest move. I'll play the first break. I might only get, you know, 20, 30, 40%, but I'll take 20, 30, 40% green all day long, every day, anytime. And if I don't get a retest, you know, if I go from here straight up to here, then I didn't miss the move. But if I wait for the retest, I might miss the move. Here, you know, I make my 20%, re-enter, and make, you know, whatever, 100% on this move. So I'll do that all day long. And then, you know, same thing here. So if we were wanting to take puts again, our 9 EMA comes down below the VWAP. This candle closed below it. So you would be hopping in puts, you know, on this next candle here. And play down, you know, to this March 21st POC. So that's how you do the 9 EMA VWAP cross. So hopefully that's very clear and concise. It's pretty easy. What did I just erase? That was not smart. Oh, wait, I can undo it, right? There we go. So it's very effective, and it's also very easy. And you could literally grow an account just using that 9 EMA VWAP cross alone. Now I'll go over, I have a bunch of DMs. I think only one person in the class. Are my headphones off again? Okay, no, my headphones are on. Angel, you can try to ask again. Hanson Ford, I see your message. I'll have to get to you after the class. If I forget, just DM me again, because I didn't read the whole thing just because you said you wanted to talk about it outside of the class. And if I change screens, I might forget to come back to you because I won't have a notification. I get way too many. So as for the clouds, God, this chart's going to get really messy really quick. But so let me take some of these arrows off to try to clean this up a little bit before I throw clouds on here, because it's going to get crazy really fast. All right, clouds. I tend to look at them on the 30-minute. I mean, not only the 30-minute, but that's where I will start looking at the clouds. Let me turn off my VWAP and the 9 EMA here. So, yeah, that's ugly. Actually, let me just make sure all of the clouds are turned on. Yeah. So, I don't have these turned on when I'm trading. I do look at them like pre-market or after hours and have an idea of where the clouds are. So, and I'm sorry, I forget who was asking, but the closed clouds are going to be these darker gray ones. So you can see, like, this is the 1 day cloud. It's dark gray. If I go back Here it turns light gray and it's open. So when the clouds are dark gray, here's a good example. The price can come down through it, but it can't cross below the cloud. So you'll notice, and this isn't just like, oh, we're getting close to the bottom of the cloud, let me open. This happened to open, which allowed the price to go through it. When they're closed, they can go from outside back to inside, but they can't go from inside to outside unless there's some major news event that moves them. But these levels get respected so much. Like you can see we bounced here. I mean, actually gapped from this bounce of the daily cloud, daily bottom. We have these snake clouds, which are like the mid clouds. I will cover those more in depth. I'm going to take some of the clouds off the screen so it's not so confusing. George, the clouds are a private indicator from Shorty's Discord. So, yeah. So for people that are just in the YouTube, I'm not trying to like make you guys feel left out or anything, but I am showing a few private indicators like the full send and these clouds, which you won't have access to. But so the clouds are just deadly accurate. Like so you can see here, clouds are open. We're able to pass through, back up. I'm trying to find like something monumental to show you, but basically, like if I take off a majority of the clouds, so it's not so cluttered and overwhelming. So here's the daily cloud. Did I turn off the monthly cloud? Okay, I did. So this is just the daily cloud, and then like my charting. This here is a bearish backdoor. So when we break the cloud and come down, you know, you would play puts from here down. Generally, you're looking for a retest. So come outside the cloud like we did here, come back up, retest, and the bigger move happens after the retest. I guess that happened here as well. We came out a tiny bit, back in, and then this is the retest, right? So yeah, our retest is going to be the bigger move. So this is a bearish backdoor. A bullish backdoor would be the same thing, but just to the call side, above the upper cloud. So here, this is probably like war news or something. I don't know. Something happened that was enough to drive it outside of the clouds, right here where it's closed. But you can see it came quickly back inside. This is very rare, but it does happen occasionally. And then, so there's basically two types of trades you look at with clouds. You have the bearish backdoor or the bullish backdoor. And then inside the clouds, so like here when you cross back inside, this is going to be a bullish money shot. And if you cross from the top down, this would be a bullish money shot. Again, same thing. You're generally looking for a retest and then a rip. And then you can see like this center, it's called a snake cloud. It acts as, you know, support and resistance for the stock. So when you do play these money shots, you know, expect to sell at the snake cloud. I feel like there's something else I wanted to say about the clouds. Well, here's a good example for you. just to show that the clouds don't open specifically because the price is coming up to them. So this cloud stayed closed, and you can see we rejected here and came back inside. Here, so since this is a daily cloud, it opened when this cross happened, but it doesn't look like it, but it did. These can only change once a day. Like I believe after the market's closed or something like that. But yeah, at the end of the trading day, they'll open or close. So, and the other thing I wanted to mention with the clouds is, so the daily ones can only move once a day. The 4-hour clouds can only move, the 4-hour clouds can move every 4 hours. So let me put everything back on the chart here really quick. I don't like to look at it like this because it's very cluttered, but you want to know where your levels are. You know, because like if you're looking at calls and you're coming up to a closed cloud, you're probably going to reject. So 4-hour cloud can move every 4 hours. Daily cloud can move once a day. Weekly cloud can move once a week. And the monthly cloud can only move once every month. So like here's, I think this is the weekly, and this blue one is the monthly down here. And they're open right now. The other thing I would touch on with clouds is they're based on average true range. So the time frame that you're looking at doesn't change where the clouds are. It just changes your candlesticks. If I go to a 4-hour chart, I'll still have all of my clouds and none of them move. You know, I'm just looking at longer candlesticks. But if I go above 4 hours, like to 1 day, now my 4-hour clouds don't show because I'm above the time frame that they show up on. If I go above 1 day, my daily clouds wouldn't show. If I go above 1 week, my weekly clouds wouldn't show. So that's the only thing to keep in mind as far as the time frame. But these things are like deadly accurate. Like if we look at Amazon, and if we go to probably the 1 month chart. Okay. So if you look at the monthly chart, so obviously these are just the monthly clouds, right? And you can see closed, 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 open here, goes through it, comes back inside, closes, stays below it, opens, goes above it. You know, same thing. Closes here, touches it, rejects, so on and so forth. It just shows, you know, how really accurate these clouds are. But what's really interesting about Amazon on the 1 month chart with the 1 month clouds is if you go back to, or actually, if you look at Amazon all through here, like we're never near the bottom of the monthly cloud, right? We're nowhere near close to it, except for here. And the market was pretty shaky. You know, these last few months when we were getting close to the bottom cloud here, the monthly bottom cloud. If we look back, the only time in the near future where we actually touch the monthly bottom is 2008. I don't know how many people were trading in 2008, but 2008 was, you know, like the housing market crash, and the stock market had a pretty big pullback. So that's how deadly accurate these are. When Amazon or big tickers get down close to these monthly bottom charts, I mean monthly bottom clouds, you're going to see like a massive sell-off. This is 2006, you know. Yeah. So yeah, you'll end up seeing like good sell off here. So just something to be aware of. Same thing if you're looking at the upper monthly cloud. If a big ticker like Amazon or Google or something like that is trending towards the top of the monthly cloud, you're probably going to be ripping, you know, for a while. So just a few things to keep in mind. But that's really it for the clouds as far as like what I can cover for you guys in a short time. I'll open it back up if anybody has any questions.
Yeah, I appreciate that, Rocket. It was helpful. Thanks, man.
Oh yeah, no worries. Like I said, it should be enough to get you going moving forward. Sorry, Earthly Kiss, I just saw your question. I can't answer your question directly because it's more than just like what's the average move for full send. It depends on what time frame you're looking at. So I'm going to answer this like the best way that I can. And I'm not, when I say this, I'm not talking down to you or trying to be disrespectful. I'm talking to a pretty big audience. And so this is to try to cover everybody's trading level. So again, not directed at you, and I'm not insulting your intelligence. I don't know your trading level. We've talked a little bit in Keenan's Discord, and that's about it. With trading, you know, if you're looking at like a 1 minute time frame or a 3 minute time frame or a 5 minute time frame even, your moves are going to be really small. So like if you play a bull flag on a 3 minute time frame, you're generally going to be in and out of that trade, I would say within like 30 seconds to maybe 15 minutes at the most. If you look at something on a 1 hour time frame, like 1 hour candlesticks, that same bull flag could actually take like a full day to play out, or maybe even 2 days. And so the further up you go on the time frame, like if you go to a 1 day candlesticks and you find a bull flag, again, now that same bull flag could take a few weeks to play out. So when I talk about full send charts in the Discord, I always say like this is a one year, 1 day chart, or a 1 month chart. If I say 1 year, 1 day, you're probably looking at anywhere from 2 weeks to a month for the whole move to play out. If I say it's on the monthly chart, you're probably looking at 6 months to a year for the whole move to play out. So, and again, if I say it's on a lower time frame, like 15 minutes, that'll probably play out in a day or two. But most of the full sends that I talk about are going to be on the larger time frames, like the 1 day, 1 week, 1 month, 4 hour, 2 hour, 1 hour, things of that effect. Because I don't really play the full send on the shorter time frames. They do work, but yeah, for full send, I generally just look at the longer time frames. So any other questions before I kill this?
Hey, Drew, this is Hanson.
Hey, what's up, Hanson?
Hey, I don't have a question. I just wanted to say thank you for all of your time. You spend an enormous amount of it supporting us. Thank you very much.
Much love, brother. I appreciate it. And that's to everybody. I mean, I do this like out of love. Like I want as many people to be successful as possible. I like to see people succeed. So any little bit that I can do to help people better themselves and possibly better their charting, trading, like I'm all for it. So my DMs are always open. If people have questions, hit me up. You know, I really just like genuinely from the bottom of my heart, I want the best for everybody and I don't want anything in return. The one thing I will say is like, if you ever feel, because people do DM me like, hey, what's your PayPal? Like, let me send you a tip or whatever. And the answer is always going to be no. But if you really, really do feel the need to like pay me back in some way, shape or form, please instead like go buy a homeless person a meal or a sleeping bag or donate to your favorite charity. That would mean a lot more to me than, you guys trying to send a tip to me. So that's where I'm at. So like I said, it's all love. Just want to see people succeed. And, a lot of us have it pretty good, and we're able to help out people that don't have it as good as us. So, yeah. Any other question, guys, before I kill this whole thing? And no worries, Angel, you're welcome. And sorry.
Thanks, Ken. Appreciate it.
Oh, no worries. Thank you. Sorry for all the technical difficulties at the beginning. It's been a long time since I've done a live, and I messed it up at the beginning. That's kind of funny. All right.
Appreciate the Rockets. Thanks, man.
Oh, no worries. Thank you. Oh, thank you, Earthly Kisses. I appreciate that. I'm assuming by your name you have a big heart too. So much love. I'm going to give it like 30 more seconds here and see if there are any other questions. If you do have a question and I end the stream before you ask it, just hit up my DMs or ask, in any of the Discord public channels and just at me and I'll get to you. All right. It looks like we're good on the questions. Anyway, much love, everybody. Have a good rest of your evening. Best of luck tomorrow in your trading. And I'll try my best to give you guys all plays. All right.